But let's get talking to another company. Anil Jain, MD of Jain Irrigation, joins in this time to talk about the business. Hi, Mr. Jain. Thanks very much for joining in. We do understand that your MIS revenue growth has primarily been driven by the export business as opposed to the domestic business. Can you just tell us whether the export momentum is continuing for you, and how does the domestic business look in comparison to that?
Good morning to you. For the first half, what you say is correct, that our domestic business had a negative growth of 4 and 7%, while exports grew, exponentially. But for the entire year, including second half, exports will continue to do well. Overall exports, for the whole year would be about 60 to 70% growth compared to what we had earlier. But what is even more positive is that in the current quarter already, we will have a positive growth in the domestic business, almost close to more than 20%, and that would continue in the fourth quarter already further. So what that would mean that for the entire year, overall MIS business should grow, between 20 to 30%, and that would include, 15 to 20% domestic growth and 50 to 70% export growth. So all in all, post monsoon, it looks like a very busy and good season for us.
Anil, morning. The other point is that what's happening with receivables, because there was decline in Q2, but that's still at an elevated level. But by when do you think the situation will return to normal?
I think, the receivables in terms of overall absolute number has come down already by almost 450 crores in first half, and they will come down by maybe another 150 crores in H2. When that happens, by March 14, you will see that our receivables for the micro irrigation business, which were almost close to a year, days outstanding sales, would be down to close to almost 6 months. So we would have shaved off a significant amount of receivables already in this year, and the next year it should further go down. Overall, in absolute terms, March 12 our receivables were about 2,500 crores. March 13 they were down to 2,000. By March 14 they will be down to about close to 1,500 crore. So every year we are shaving off 500 crores. What that would mean that by March 14 the level we reach would be very comfortable. I mean, it will be overall for the company, what used to be 270 days will be down to about 120 days or so. And that's the nature of the business, because certain amount of credit will have to be given to the farmer.
Sure, that point is taken, but 6 months itself would also be high. I mean, given the industry average of about 3 to 4 months, won't that be right?
No, that's not the industry average per se. And by March 15, I think it will go down from 6 months, maybe down to that 90 days to 120 days. What we have to also keep in mind is that, farmers and the entire business model was used to subsidy from the government for last 2 decades or so. We moved to the cash model. Now, for first 4 quarters, that meant reduction into, the business also when you change the business model. Now we have got the revenue growth back, and receivables are coming down. And by March 15, I think we'll be in a very comfortable position in terms of overall outstanding days of receivable, along with the growth. We used to have that 30% growth all along for almost 2003 to 2011. And I think we will reach that good level of high level of growth already now from this quarter, and that should continue going forward, because in rural India, with higher prices of agricultural commodity, farmers are making more money. Due to the labor shortages, they need mechanization. And last year majority of the country also faced these water shortages due to drought, famine, etc. Now because of this drought, farmers are also realizing more importance of this whole water management. So all in all these things augur very well for the growth and a sustained growth in a with a lower and a asset light balance sheet.
Okay. Mr. Jain, the other point that we wanted to touch upon was also the margin contraction, which was quite significant and prominent in the previous quarter, and that was because of the polymer prices that you did allude to. How is it looking in this quarter, and what is a margin projection that you can give us possibly in the foreseeable future?
Margin contraction was combination of higher polymer and energy prices on one hand, and also the fact that the product mix. We sold more of the pipes which have typically lower EBITDA, and with the change of business model also in micro irrigation, we have started giving cash discount to the farmer as we are collecting cash. So it improves our net margin, but the EBITDA margins goes down. So that was the reason. So as we come into the now busy season, with better production capacity utilization, fixed cost absorption will be better. That should improve margins. Polymer prices are off the high they had reached in August when rupee was 68, 69. So they are down by almost 5 to 7%. So both of these factors, higher capacity utilization and lower polymer prices, should improve margin now. But at least for another quarter, compared to the earlier year, if you look at the margin would still be lower because we have changed the business model, where we will have lower EBITDA, but at least the same level of the net margin due to the cash discount we provide. But all in all, as I said, maybe this quarter, another quarter, you might still see somewhat subdued margins. They will be better than first half. But as we move forward next year, even margins would come back, because when you would be comparing with the new business model. Right now we are comparing model with the YOY basis based on the earlier business model. So that's not the right comparison in that sense.
Okay. All right, Mr. Jain, we're completely out of time. Thanks very much for joining in. So that's Jain Irrigation talking about the business. Stock is currently up around 2.3%. Markets are also in a good position. We'll take a break, but up next we'll focus on F&O Qs, which are lined up with Bhavin Desai of Motilal Oswal Securities.